How you doing, Gav?
Good.
Before we get to today's session, let's hear from the compliance folks. Perfect. Well, we typically kick it off with kind of recapping what we discussed in August. August was kind of a big month for the Fed. Jackson Hole, which is their, kind of their wind down to summer, and they do a lot of fly fishing and things like that, but they do get to discuss a few things. So why don't we recap August?
Sure. Yeah. Since we last met, we did have Jackson Hole, and I guess we could call it, Powell's Jackson Hole pivot. And we joked in our note that maybe, Powell was reading over our shoulder last month when we wrote our note because he turned dovish and essentially reset, the inflation kind of tolerance towards 3%. And framed it as like flexibility, but really what it did to your point in August, it fueled what looked to be a late summer rally in risk assets. So maybe that's the biggest thing that happened since last time.
Well, that's great. Good update. And stocks continue to kind of to drive forward here. And people are concerned. Are we overvalued, not overvalued? Where do markets go from here? And we don't often spend a lot of time talking about any one specific asset class or an investment thesis. But one thing I know you've been keeping an eye on, we've all been keeping an eye on, is this very weak dollar or bear dollar. Talk about how that's going to impact, or how you think it's going to impact, what tends to do well in weak dollar environment, what doesn't do as well. Give us some insight there.
Yeah, sure. I think we can say comfortably that the US dollar since the middle of the summer has been in a bear market. That is, pretty easy to see. And I would say quite severe relative to history. And to your point of like what are the usual suspects to look for with this type of condition, weakening dollar. You're usually seeing equities fairly favorable and small cap outperforming large cap, which we've started to see signs of. Um, you would also see assets like gold and now cryptocurrency, which we can kind of group together. Gold and Bitcoin have been doing very well together, but you would expect them to do okay in a weak dollar environment. And then, bonds can struggle, and we've kind of seen that they've really been kind of range bound. We have thoughts on, how to handle fixed income. Um, I think maybe the most surprising thing, though, is that in this type of weak dollar environment that we've started to see the last couple of months, you would expect a very well, you could expect a strong bullish move in oil, which we have not seen yet. And that has my kind of attention. And although, the positioning in oil is quite bearish, you could see a geopolitical headline, for instance, could, spike oil with how bearish the short side positioning is.
Mhm.
But, I think what we're seeing is that gold has really outshined, pun intended, in this weak dollar environment. And that seems to be the biggest call out.
Well, yeah, that's September historically not a great month for equities. And I know we don't put a lot into that. That's just kind of probably how it falls. But do you see weak dollar persisting through the rest of the year? And with that in mind, I mean, you kind of outlined the areas or asset classes that you think will perform, but what's your thought on the dollar? Does it gain a bid here? Does it move forward, or does it kind of just wallow?
I think, time will tell. And for now, I would say the trend is intact.
Mhm.
And until we see, on the financial dollar, the dollar index, the Dixie, it's been under 100. So relative to the other major currencies in the world, it's undervalued until it can get back to 100 and above. I think that level would start to be interesting. And then also the trade weighted dollar is weak. So across the board, until we see, movement out of this kind of area that's been carved out since midsummer, I would say that the trends that have been in place across asset classes, stocks, bonds, currencies, commodities, you would expect those to continue. So really, I think the takeaway, if we do get some type of volatility in, stocks, equities, gold, Bitcoin in September, later this month or October, for now, we would see that as an entry point, not an exit, and we'll keep looking for opportunities as they come.
Well, that's great. I think that kind of sums it up. I mean, we continue to be a little bit more bullish on stocks, risk assets, and it sounds like we think that trend continues with the outliers that we're dealing with, which is perhaps a Fed that's more accommodating here, weak dollar, risk assets should be strong. So, well, I think that was a good session, Gavin. Thanks for your input there. And with that, everyone, enjoy the beginning of fall, and we'll see you in October.
All right. See you, Todd.
Thanks, Gavin.